You're watching Silver News Daily. Subscribe for more.
What if I told you silver could explode past $100? And soon. Sounds insane, right? But before you write this off as another crazy prediction, listen closely, because the pieces are falling into place for a financial earthquake that could change everything. Inflation is raging, the Federal Reserve is cutting rates, and Trump's new tariffs are about to ignite a firestorm in the markets. But here's where it gets wild. Behind the scenes, supply chains are collapsing, silver reserves are drying up, and a massive market squeeze is brewing. One that could send prices into uncharted territory. This isn't just speculation, this is a ticking time bomb, and when it goes off, it could create a wealth building opportunity unlike anything we've seen in decades. So, is silver really about to make history? Stay with me, because by the end of this video, you'll see why this could be the most explosive rally of our lifetime, and how you can act now to get ahead of the crowd. Don't wait, the clock is already ticking.
If the metal's not in New York or in the US yet, then they're at risk of having to import that metal and pay the tariffs on it. Now that's not 1 or 2%. Even 1 or 2% with leverage could wipe a bunch of institutions out. But we're talking about 25% potentially. So what has happened is since December, a lot of metal has been flowing from London into New York in anticipation of potential tariffs. And so they've been scrambling. These traders have been scrambling to get the metal into New York in case they have to make a delivery on the metal when their contract matures. So just to give you some idea, there was a really interesting report by TD Securities, a senior analyst by the name Daniel Galley, and he said metal is flowing from London to the US on Trump tariff fears. And yet, I can explain this, but he said just 30% of the London silver is actually available.
If you've been to the grocery store lately, you already know inflation isn't going anywhere. Prices are still rising, and while the Fed keeps insisting they have it under control, the reality is starting to set in. 3% inflation might become the new normal. Now, why does this matter for silver? Because history tells us that when inflation gets out of control, silver goes parabolic. Look back to the 1970s. Inflation was running wild, and what did silver do? It exploded from $1.30 to nearly $50 an ounce. That's a 38x move in less than a decade. Meanwhile, the stock market went absolutely nowhere. And here's where things get interesting. Inflation today may not be as high as it was back then, yet. But remember, inflation doesn't just disappear overnight. If anything, it creeps back in waves. And with the Fed now shifting toward rate cuts instead of rate hikes, they're practically rolling out the red carpet for higher inflation. That's not speculation, it's math. When interest rates go down, the dollar weakens. When the dollar weakens, hard assets like silver become more valuable. In fact, Peter Krauth, author of The Great Silver Bull, points out that in the 24 months following the start of a Fed rate cutting cycle, silver has historically gained an average of 32%. In some cases, it's gone up 300% or more. And the Fed isn't stopping at just one rate cut. Analysts are predicting multiple cuts in 2025, which could unleash another wave of inflation, one the Fed won't be able to rein in. And when that happens, silver doesn't just rise, it explodes. So the question is, are we heading into another 1970s style silver boom? Because if we are, history suggests that today's silver prices are an absolute steal. And here's the thing, inflation isn't the only force at play. There's another major factor that could push silver even higher, and it's happening right now. The Federal Reserve's rate cut dilemma. Let's break that down next.
Sort of stimulate the economy. And if you think a little bit further back, they had been raising rates since I think it was 2022 or so, pretty aggressively to slow things down. They thought the economy was overheating. So if they raise rates and then eventually cut rates because they've been raising them a lot and slowed things down, it's normally because they feel the economy needs a bit of help. So they cut rates. And the bond market usually follows, and bond rates come down because lenders realize that yes, borrowers need a little bit lower rates. We need to help them along, and so on. But we've seen the opposite happen now since September. The Fed has cut rates by 100 basis points, so a full percentage point. And I hope I'm not getting too technical, but in the 10-year bond, yields have gone up by 10%, by a full 100 basis points, so a full percent. This has never happened before. And really what it is, it's the bond market telling us that they disagree with the Fed. They think that the Fed should not have started to cut rates in September, that the economy was doing just fine, and that they're essentially juicing the market without it being necessary. And by doing that, the bond market's telling us that rates are going to start going up again. And that's why you're seeing this start to get priced in. So if the bond market sees rates going up again, it's in simple terms, it's telling you inflation is going to come back. So, and I've been saying this for about 3 or 4 quarters now, for about a year. I said, I think that by sort of mid 2025, we're going to start to see inflation bottom and start to trend back up. And if you look at the behavior of the bond market, it's basically telling us exactly that. This is what we should expect. And probably within, 3 to 6 months, we'll see that start to happen.
We need to talk about the Fed's next move, because what they do next could determine whether silver gradually climbs higher or goes absolutely parabolic. See, the Federal Reserve is trapped. They've spent the last few years hiking interest rates to fight inflation, but now they're pivoting, shifting toward rate cuts. And here's the thing, every time the Fed cuts rates, silver wins. Let's look at history. During the last 5 major rate cutting cycles, silver prices surged by an average of 32% over the next 2 years. In some cases, silver didn't just go up, it tripled or even quadrupled. Why? Because rate cuts weaken the US dollar, and when the dollar drops, investors rush to real assets, gold and silver. But this time, the stakes are even higher. Right now, the government is drowning in debt. Over $2 trillion in US debt is rolling over in 2025 alone, meaning they need lower interest rates just to keep making payments. That puts enormous pressure on the Fed to slash rates even further, even if inflation starts rising again. And this is where things could get out of control. If the Fed keeps cutting while inflation stays high, we could see a repeat of the 1970s, when silver skyrocketed nearly 3,800%. Investors panic, the dollar free falls, and silver becomes one of the last safe havens left standing. Now, the Fed wants you to believe they're data dependent, that they'll cut rates slowly and responsibly. But with an election coming up and Washington desperate to keep the economy afloat, there's a good chance they go too far, too fast. And once that happens, it's game over. Silver holders could be looking at historic gains, while everyone else scrambles to get in. But here's what makes this even wilder. It's not just inflation and rate cuts fueling silver's rise. There's another major factor that could send prices soaring: Trump's new tariffs. Let's get into that next.
I published about, getting on almost 3 years ago now, a book called The Great Silver Bull. And really, it's all about the opportunity of investing in silver. And what I do is, it's really an approach where I try to allow someone who's maybe a little bit familiar or even somewhat familiar, but get a good overview of silver, and its role historically, its role with economically since about 4 or 5 thousand years, and then how it's used today, where you find it, and ultimately how to invest in it, how to take advantage of it, and I'm thinking way ahead, but at some point, how and when to sell your silver and your silver investments, because it's going to be, I think, really a generational bull market, but it will peak at some point, and you're going to want to look for those signposts for when to ultimately sell and move into other assets that are less highly valued. I also publish a newsletter that's on more or less a weekly basis. That's a paid letter called Silver Stock Investor, and I track mostly silver stocks really through there. It's the only silver investment newsletter that I know of. And I just launched about 3 weeks ago a free silver newsletter called Silver Advisor. And that really follows a few silver companies. It's a growing list of companies that what we do is we follow their news releases. All the material news that comes out from these companies, we review it, analyze it, comment on it, and it's all companies that we ourselves own as well. So we have an interest in these companies. That's why we follow them, because we like them. And so if anyone's interested in it, it's Silver Advisor. They can subscribe for free at thegooldadvisor.com/registration. And as I say, the price is good. The price is right.
We've talked about inflation and rate cuts, but now let's get into the wild card that no one saw coming, Trump's 2025 tariffs. If these go into effect, they could trigger a massive silver supply shock, one that sends prices skyrocketing overnight. Here's what's happening. President Trump has announced a 25% tariff on all Mexican and Canadian imports, including silver. Now, this is a huge deal because Mexico and Canada are two of the biggest silver suppliers to the US. Think about it. 80% of all silver grain used by US refiners comes from abroad, mostly from Mexico. That silver is used to mint bars, rounds, and coins. If Trump's tariffs hit, we're looking at an instant 25% price hike on imported silver. But it gets even crazier. The industry is already bracing for impact. Traders have been scrambling to move silver from London to New York before the tariffs kick in. Why? Because once those tariffs hit, every ounce of silver imported could cost significantly more, creating an instant bottleneck in the supply chain. And don't just take my word for it. A recent report from TD Securities reveals that only 30% of the silver stored in London is actually available for delivery. The rest is locked up in financial contracts, meaning it can't just be shipped over to fill the gap. That means one thing. If tariffs go into effect, US silver dealers and refiners could be facing a massive supply crunch. And when supply gets tight, what happens to prices? They explode. And it's not just coins and bars that are affected. This could hit the entire industrial silver market too. The reality is the US can't produce enough silver to meet demand on its own. We only mine about 28 million ounces per year, yet domestic demand is over 162 million ounces. That's a massive shortfall, which means the US is heavily dependent on imports. Now, imagine what happens when those imports suddenly become way more expensive.
And they tend to borrow longer term. Mostly they're not borrowing on the shorter end. And so their cost of money, so to speak, to borrow is going up. So that will hurt their profits. And I think just yesterday or a day before, the S&P was at an all-time high. I think it was 6,100. And so again, it's not an automatic kind of thing, but the stock market's at an all-time high as well. Mm-hmm. So to go back so in other words, that means that, there's maybe more downside risk than upside risk because it's very, very richly valued. And for the president to talk about rate cuts and he definitely wants a weaker dollar, and he definitely wants lower interest rates. He's a real estate guy. That, all adds up. But technically, the Fed is independent. And Powell has said that, he ignores, what politicians are saying they may or may not want. If that continues to be the case, then you'd expect them that should not influence them. Where I sort of defer from that is that I think it's something like at least $2 trillion of US debt that's renewing just in 2025 alone. I saw a chart, unfortunately I don't have it, but it was a bar chart that showed how much debt the Treasury has to roll over each year. And that's because, bonds were issued in prior years and they're coming due. Now, Yellen, who's the former Treasury Secretary, missed a really great opportunity. I don't know why, but when rates were really low, she missed an opportunity, like I'm talking long-term rates. She missed an opportunity to roll over debt that was maturing. She could have rolled over, 20, 30-year treasuries, at like 2-3%. And she didn't. She just kept rolling them over instead into short term, which was even lower, which made things a little bit easier, but now is causing a massive dilemma because, like I say, we're having a huge amount of U.S. Treasury debt coming due this year, and the Fed can look at that and will tell you, I think, with a pretty much straight face, oh, we don't pay attention to that. That's not our problem. It's not our concern. Our concern is inflation, trying to control inflation, and maximizing employment. That's their sort of dual mandate, which, by the way, are contradictory. But so they'll tell you that they're ignoring how much interest the government has to pay. But I don't believe that they actually do completely ignore it, because they realize that if there is so much debt that is to be rolled over, And they, because of their own doing, because of the Fed's own doing, the Treasury has to pay that much more in interest because the Fed's been raising rates, that they're causing an even bigger problem.
If you think silver prices are high now, just wait until you hear what's happening behind the scenes. Because a major silver shortage is already unfolding, and it's about to get a lot worse. Right now, we're seeing a silent silver squeeze play out in real time. The COMEX futures market, where traders buy and sell silver contracts, is flashing warning signs that the physical silver market is tightening fast. In January 2025, the premium on the March COMEX silver contract spiked by nearly 50% compared to spot silver prices. That's a massive red flag. Why? Because it signals that investors are willing to pay huge markups just to secure physical silver for future delivery. And here's where it gets even crazier. The silver supply chain isn't keeping up. Unlike gold, which central banks stockpile in vaults, silver gets used up in electronics, solar panels, and industrial applications. That means less available metal for investors. And now with Trump's tariffs looming, traders have been frantically moving silver from London to New York to avoid the extra 25% tax. But here's the problem. Only 30% of the silver in London is actually available for delivery. That's right, most of the silver sitting in London's vaults isn't actually up for grabs. It's tied up in contracts and ETFs, meaning there's a limited pool of metal that can actually be moved to meet demand. And this is exactly how silver shortages start. When available supply shrinks but demand keeps rising, prices don't just go up, they explode. We've seen this before. In 1980, the Hunt brothers tried to corner the silver market and prices shot up to $50 practically overnight. In 2021, Wall Street bets triggered a retail silver squeeze that saw demand overwhelm supply, causing major premiums on physical metal. Now we're looking at a scenario where the entire COMEX system could be under pressure. If too many investors start demanding physical delivery instead of cash settlements, the system simply doesn't have enough silver to go around. And here's what happens next. Premiums go through the roof. The price of silver on paper may say one thing, but in the real world, you'll be paying way more to actually get your hands on the metal. That means two things. Silver is becoming harder to find. The price you see on the screen is not the real price of silver. And if this trend continues, we could be heading toward a full-blown supply crisis, one that forces even bigger institutions and hedge funds to pile into silver at any cost. But here's the thing, silver isn't just a monetary metal, it's also a critical industrial metal, and demand from one key sector is absolutely exploding. That's right, the green energy revolution is fueling silver demand like never before, and this could be the final push that sends silver prices past $100 an ounce.
Years, and that's not even accounting for inflation. So if you account for inflation, it actually lost 70% in 10 years. In the meantime, so let's say apples to apples, without accounting for inflation, gold was up 14 times, silver was up about 28 times in that 10-year period. So silver actually doubled what gold did, and gold did really well, up 14 times in the 1970s. And resources were the absolute place to be that whole time. And I think we are coming into that kind of environment again. And bonds are really not at all where somebody wants to be, unless they're very, very short-term bonds, like money market type things or one-year treasuries. That's, for safety and liquidity, that makes some sense. Much beyond that, I would stay away from bonds. And people need to look for other things in their portfolios, and resources and precious metals really are the place to be for the next, I think, 5-10 years easily.
What about the fact or the notion that President Trump the other day said that he would demand interest rate cuts from the Fed? Is that just, the art of the deal type of stuff, where he just kind of like starts off hot and heavy and he's just trying to set expectations with the Fed? If we do get more rate cuts, like one of the scenarios you kind of pointed out, wouldn't that also be a tailwind for tech stocks and the growth sector as well, with like crypto and all those other guys? Like how would they fare? I mean, granted, gold's already ripping higher today. I think we almost did. We hit an all-time high today. I think
you know what? I'll be perfectly honest. All right, let me go and look at that right now.
I think we either hit it or got really close to hitting an all-time high. Whatever the case may be, gold and silver are both ripping higher today. So
you're right. Actually, gold is 27.74 as we speak. So I don't know when your viewers will see this, but I think the all-time high on like an intraday basis was like 2,800. So we're
Right.
about $25 away from that. It's incredible. You're right. Very, very close to
Yeah.
all-time highs.
So it seems like gold is sniffing out this inflationary cycle that's coming our way.
That's
Where does
a
that
great way to
leave
put it.
where does that leave the growth sector? Where does that leave crypto? Do they also get a little bit of a tailwind from that?
So maybe. I mean, you can never really know. But what I will say is I think the odds are a bit stacked against the broader market for two reasons. One is a lot of what goes on in the stock market is fueled by debt. A lot of these companies to grow, to expand, they need to borrow. And if 10-year yields, like I was telling you about earlier, have actually ticked up in when they normally should not, because the Fed's cutting, they should be following the Fed's path, so to speak. And they're not doing that, meaning they're sniffing out inflation, and therefore the bond market is demanding a higher return. And that means that the cost to borrow is essentially going up. And these companies, these tech companies and all the others, they have to borrow, as I say, like everybody else.
We've talked about inflation, rate cuts, tariffs, and silver shortages, but there's one more major force pushing silver higher. Industrial demand is absolutely exploding. See, silver isn't just a monetary metal, it's also an essential industrial commodity, and one industry in particular is driving demand through the roof: solar energy. Right now, solar panel production alone consumes over 20% of the world's annual silver supply, and this number is only going one direction: up. China is flooding the market with cheap solar panels, driving a global expansion in renewable energy. But here's the kicker: silver is irreplaceable in solar technology. It's the most efficient metal for conducting electricity, and no other material comes close. And we're just getting started. By 2030, some analysts estimate that solar panel demand alone could consume up to 50% of the world's silver supply. That's right, half of all newly mined silver could be going straight into solar panels. But it's not just solar. The rise of AI, 5G networks, and electric vehicles is creating even more demand for silver. Every EV on the road today contains between 25 to 50 grams of silver, and as governments push for more electrification, demand will skyrocket. Now, here's where things get really interesting. Despite this massive industrial demand, silver mining supply has barely budged. Global silver production has stagnated for years, and new silver discoveries are becoming rarer. Unlike gold, where miners can chase higher prices, silver is mostly mined as a byproduct of other metals like copper and lead. So even if silver prices shoot higher, mining supply can't just increase overnight. It takes years to bring new silver mines online, and in the meantime, demand is rising faster than supply. And that's exactly why silver is still severely undervalued. Think about it: industrial demand is exploding, silver shortages are already forming, and the financial system is on shaky ground. Historically, this is the perfect storm for a silver price breakout. But here's where things get even wilder. While silver prices are rising, there's one way investors can see even bigger gains. That's right, silver mining stocks. Because when silver prices surge, silver mining stocks can skyrocket by 10x, 20x, or even more. And that's exactly what we're going to talk about next. Let's dive into it.
You get this inflation comes in. The central banks say, "Oh, this is not good. Things are overheating. People are complaining, paying too much for things. Salaries are getting too high because people want higher salaries to account for higher costs for cost of living." So this inflation waves comes up. They start raising rates. It cools it down again, and then eventually they have to back off because things might slow down too much. And then you get this third wave, probably, that will come again. So that's really what happened in the 1970s. And we're just over the first wave. It's very likely we're going to get a couple more waves of inflation. And unfortunately, each of those subsequent waves was actually peaked higher than the prior wave. So if that happens again, the previous wave of July, the peak of July 2022, when inflation reached 9%, we could surpass that in the next wave. So that's kind of scary. So it's looking like these are kind of the good old days right now, while people are still complaining about the prices of things. I think we're going to see, all of that start to come back again. What we've experienced the last 2 or 3 years is going to come back, and potentially even stronger.
Yeah, it's really interesting, especially when you say that 3% is the new 2%. That might not seem like much, but compounded over time, that is a huge difference.
You're absolutely
And
right. Exactly. And that's how it's kind of sold to us is that, oh, it's 3%. So, something cost you $10. It's uh, you know, $10.30 next year. It doesn't sound like a big deal, or something that's $100 is actually $103 next year. It sounds, pretty digestible, but as you say, this is on already high prices, right? That
Mhm.
have risen in the past few years. So now you're adding, you could argue a lot of things have doubled in the last 4 or 5 years in terms of where they were prior, right? So now you're still adding 3%, 5% per year on prices that have doubled. So it's very meaningful to people, and people really are struggling with this. So it's not going away. People need to, I think this is why we're talking, and that's why I'm a fan of silver, of gold, precious metals, and commodities in general, because if you look at, again, the best comparison is the 1970s. And I don't have it in front of me, but I have this amazing chart that shows, it compares the S&P, the Dow, gold, and silver in the 1970s. So for about 10 years, if you look at what happened with the indices, so this is the broad stock market,
Mhm.
they went absolutely sideways. Zero gain in the S&P in 10 years.
If you've been to the grocery store lately, you already know inflation isn't going anywhere. Prices are still rising, and while the Fed keeps insisting they have it under control, the reality is starting to set in. 3% inflation might become the new normal. Now, why does this matter for silver? Because history tells us that when inflation gets out of control, silver goes parabolic. Look back to the 1970s. Inflation was running wild, and what did silver do? It exploded from $1.30 to nearly $50 an ounce. That's a 38x move in less than a decade. Meanwhile, the stock market went absolutely nowhere. And here's where things get interesting. Inflation today may not be as high as it was back then, yet. But remember, inflation doesn't just disappear overnight. If anything, it creeps back in waves. And with the Fed now shifting toward rate cuts instead of rate hikes, they're practically rolling out the red carpet for higher inflation. That's not speculation, it's math. When interest rates go down, the dollar weakens. When the dollar weakens, hard assets like silver become more valuable. In fact, Peter Krauth, author of The Great Silver Bull, points out that in the 24 months following the start of a Fed rate cutting cycle, silver has historically gained an average of 32%. In some cases, it's gone up 300% or more. And the Fed isn't stopping at just one rate cut. Analysts are predicting multiple cuts in 2025, which could unleash another wave of inflation, one the Fed won't be able to rein in. And when that happens, silver doesn't just rise, it explodes. So the question is, are we heading into another 1970s style silver boom? Because if we are, history suggests that today's silver prices are an absolute steal. And here's the thing, inflation isn't the only force at play. There's another major factor that could push silver even higher, and it's happening right now. The Federal Reserve's rate cut dilemma. Let's break that down next.
Exactly. Yeah. But here's a really, really interesting aspect to all of this. Now, we know that the US is highly indebted, record levels of debt, not different from pretty much any country, especially, the West. And as rates go up, the Treasury has to pay interest at higher interest rates on its debt. And we're at a point now where the interest payments have become the biggest single cost for Treasury, which just gets out of hand. Now, you get into this vicious circle where they need to print money just to pay the interest. So as you can imagine, that just snowballs. So here's how I see it. The Fed's really in a dilemma. They can stop cutting rates, which they started in September, and which the bond market is telling us they probably should do, because if not, inflation will go up. But if they stop cutting rates and keep rates, let's say where they are right now, say 3-4%, to fight inflation, that's going to make the debt burden more difficult for the federal government to handle, because it will have to pay these high rates on their own debt. It makes it makes life difficult for Wall Street because there's a lot of borrowing going on Wall Street, and it makes life difficult for Main Street because of people's mortgages and credit card debt, all that sort of thing. So that's one option. Stop cutting rates and help fight inflation a little bit, but you cause all these other problems. Or cut rates, continue to cut rates, make the debt burden a little bit easier for the government through its treasury payment, its interest payments, juice the economy even further. And if you do cut, let's say the Fed does keep cutting rates and cuts them pretty low, that gives them room for eventually, when inflation comes back again strong enough, that they can raise rates. So if you don't cut rates enough, you don't have room to start moving rates back up. So let's say they do that. I happen to think that's the likely path that they will take. It's the path of least resistance. Let's say they do continue cutting rates, even if they pause now for a while. If they do that, they are going to juice the economy, perhaps unnecessarily. That's going to bring inflation back. And we are going to end up, in probably another wave of inflation that's going to, I think, bring us even higher than 9% that we had in July of 2022.
Wow.
There are some fantastic charts that look at what happened in the 1970s. That's the best parallel. I'm sorry, I've been talking nonstop all this time, but it's all right. So we've got this is the best parallel to what we've seen prior is the 1970s. And in the late 60s, early 70s, you had this, I'm going to do this opposite for your viewers. So you had this one first wave of inflation. It was kind of, rounded and kind of smooth, and then it bottomed, and then it started to trend up. I think that's where we are now. So that second wave of inflation was considerably higher. And so here's what happens.
We've broken down every major force pushing silver higher. Inflation, Fed rate cuts, tariffs, supply chain chaos, a physical silver squeeze, surging industrial demand, and the explosive potential of mining stocks. But now, we have to answer the biggest question of all. Could silver really hit $100? At first glance, it might sound extreme, but when you look at the data, history, and current market conditions, it starts to make a lot more sense. Let's start with the inflationary backdrop. The 1970s inflation crisis sent silver from $1.30 to $50, an incredible 3,800% gain. Today we're seeing eerily similar conditions. The Fed is cutting rates into rising inflation just like they did back then. If silver follows the same trajectory, we're looking at a massive move higher, but inflation isn't the only factor. We're facing a physical silver shortage at the exact same time that demand is surging. 80% of US silver grain comes from Mexico and Canada, and Trump's tariffs could cut off or drastically raise the cost of that supply. Only 30% of the silver in London is available for delivery, and much of it is already being rushed to the US to avoid tariffs. Solar panel demand is exploding, and by 2030, up to 50% of all silver production could be used just for solar energy. Meanwhile, silver mining production isn't increasing fast enough to meet this demand. Unlike gold, silver is mostly mined as a byproduct, meaning new supply can't ramp up overnight. So what does all of this mean? It means that a historic supply and demand imbalance is forming, one that could create the kind of parabolic price movement that we've seen before. What would it take for silver to hit $100? Let's break it down in simple terms. In 1980, silver hit $50. Adjusted for inflation, that's over $180 today. In 2011, silver hit nearly $50 again, and that was during a much smaller monetary crisis. The gold to silver ratio is still around 90-1. Historically, when silver enters a bull market, it outperforms gold and brings that ratio down to 40-1 or lower. If gold moves toward $3,000 or even $5,000 an ounce, silver would easily break past $100. And don't forget, we're entering an election year with massive uncertainty. If economic instability increases, more investors will flock to silver as a safe haven asset. With all of these forces aligning, a move past $50 and even toward $100 is no longer just a wild prediction. It's a real possibility. Are you ready for silver's biggest breakout? So the question isn't if silver is going to rise, it's how high and how fast. We've seen billionaires loading up on silver, major institutions scrambling to secure physical supply, and mining stocks preparing for explosive moves. The writing is on the wall, and when silver finally breaks out, the biggest profits won't go to those who wait. It'll go to those who saw it coming and took action before the masses caught on. So what do you think? Is silver on the verge of a historic bull run? Could we really see 100 silver dollars? Let me know in the comments below, and if you found this video valuable, make sure to subscribe so you don't miss out on future updates. Remember, this isn't financial advice. Always do your own research before making investment decisions. That's it for today, but trust me, this silver story is just getting started.